Hello, and welcome to this, which is number 5 in the video series, How to Grow Your Business. You may recall that previously I set up a route map to show you these steps along the way. And two of those vital steps, are building a master business plan and reaching out to experts to cover the skills and knowledge gaps that you will have. We're very lucky today that I've managed to persuade Melina Petrova to give us her insights on building a financial plan. It's the financial plan that will guide you along the way. And I've learned something today because Melina is talking not about a monthly cash flow forecast, which is what I usually do, but about a daily one. And I think that's a very, very important tool in monitoring and correcting your business along the way. So thank you for listening to me. But now let's hear from Melina Petrova. Thank you.
Hi everyone, and thank you, John, for inviting me to participate in your series, How to Grow Your Business. Financial planning is very key to monitoring your business, to growing your business, if you have underperforming business, all of those situations. How do you know what needs addressing if you don't look at your numbers? Anyway, for the purposes of this, I have prepared a sample profit and loss and a cash flow forecast. We'll go through very, very basically, and if you have any specific questions, then you can get in touch with either me or John. Okay, so profit and loss. Profit and loss tells us how your business did for a period of time. Normally, HMRC or most businesses will report in 12-month periods. For the purposes of this, I have done just 9 periods, partially because I was short on space on the PowerPoint, and I just really want to give you a few illustrations to think about, really. How often do you set targets for your business? Do you do a basic forecasting, basic budgeting? It's really good exercise, because if you don't set some targets, what guarantees do you have that you're actually gonna move from where you are now? You don't really. If you have targets, you can you can work towards them. Is seasonality affecting your business? If so, by how much? It's quite an important area to consider, because if you're a seasonal business, it can leave in those periods that are not peak for you, it can really leave you with struggles for cash. And as we know, cash is important to ensure that you can carry on. I have tried to illustrate seasonality, period 4, period 5, period 7. You can see the revenue turnover is a lot less than the other periods. So key measures in the profit and loss are revenue or turnover, how some people refer to, gross profit, profit before tax, profit after tax, EBITDA. We'll go through each one of these in more detail. Revenue, it kind of says as on the tin, is what you had from your customers in a set period of time, and when you deduct from your revenue the cost of sales, you arrive to the gross profit. Gross profit can be measured in absolute and percentage terms, as I have shown in the model. and you can see majority of the periods you're between 50, 51, 49%. Some periods you have gone a little bit lower, so period 9 you've done 47%, period 2 47% gross profit, and period 4 55%. Why am I drawing your attention to this? Gross profit is really important area of the profit and loss. It can show you what you're doing right, what you're doing wrong. Of course, you're gonna have to go into the detail to find out more, but I would look into those 3 periods particularly if this was a business I was working with, to understand why in period 4 I did a gross profit of 55%, really good, despite it being a seasonal period, very good. Whereas in period 9, pretty poorly. When you think about it, if I was performing at 51%, the same way as I was performing in period 1, that 3,360 would have been much bigger number, and that of course would have delivered much bigger profit on the bottom. So think about those things. Overheads are things that are not really directly attributable to the cost of delivering your product or service to the customer. And there's various bits and pieces that can go in here. I have just shown the ones that I come across most often. It is important to distinguish between overheads and cost of sales. I have seen businesses where they haven't apportioned things correctly from the start, and then when you try to understand the gross profit and why it has moved up or down, then you end up making decisions with incorrect data. So make sure that these are allocated correctly from the start. EBITDA. You might have heard of EBITDA, you might have not. It stands for earnings before interest, tax, depreciation, amortization. It's another metric for operational performance, really, and it's particularly useful for businesses that are asset heavy. So asset heavy, when you have a lot of assets, you'll have depreciation going through your books, and you don't want to look at depreciation, which is a non-cash element, to dilute your the view of what you actually did in the period. Equally, EBITDA, as much as it ignores depreciation and interest, I would not advise you to not look at the profit before tax, because going back to the example earlier, if you have got a business that is heavily dependent on assets, you want to make sure that you're covering those costs. You want to make sure that you're covering your depreciation costs, because if you're not, when those assets run out of useful life and you need to replace them, where are you going to find the money for it? EBITDA is a good measure because, as we said, it ignores depreciation, but also, when you think about it, the tax rates, the interest rates, the management decisions, how to structure debt into long-term, short-term, or even the interest rates out there, they don't reflect really the operational performance of the business. They might do to a degree, but more often they're a government thing, really. So you don't want to always look into capturing that information. It really depends on the situation. So I think this is the profit and loss in a nutshell. If you have any specific questions, please feel free to get in touch. Both John and I will be happy to help. Moving on, cash flow forecast. There is a famous saying, cash is king. As much as I don't like the actual quote, it's the truth. Do you do cash flow in your business? Or if you do, how frequently? And how do you just delegate this? Do you do it yourself? Do you get something from your accountant? It's one area that it's perhaps neglected when the business is doing well, and area where suddenly the focus is on when the business is not doing so well. I've seen cash flows done on a monthly basis, weekly basis, daily basis. The daily basis one is a really good one because it perhaps takes a little bit of time to do, but then if you streamline your operations, it's not such a big deal, and it can help you avoid hiccups along the way. I will go back to that in a minute, but just to give you a bit of a structure to the cash flow. So you have opening balance, which is, as it says on the tin, what's in the bank at the beginning of the day. Closing balance. Of course, the closing balance today will be the opening balance tomorrow. And then you have customer receipts, all the incoming money, and you have got all of the outgoing money. The outgoings could be supplier payments, salaries, HMRC payments, vehicle hires, loan repayments, other bits and pieces. Be mindful when you prepare your cash flow forecast of direct debits. More often than not, businesses have got direct debits come out of their bank. Record them. You don't want something just to trip you over. I have also got here projects. Some businesses are very much project-based business. So you're gonna have to manage. You're gonna have to record project payments on here. If you're not heavily reliant on project in your business, I'd still urge you to monitor this area if you have got an ongoing project. I want to draw your attention to mouse. To the second Monday of this model. So let's say I am here today and I need to make a supplier payment because that's what my supplier is expecting, or my suppliers, 2,105, but my opening balance is just insufficient. If I haven't done a cash flow statement and addressed any issues that I foresee coming, and I can't make that payment, can I? The most I can do is 1,530, well, maybe 1,550, considering if I actually get this £20 from the customer. So what I would do is I would advise you that you do cash flow forecast every 2 weeks for every day in the forthcoming week. Go conservatively, don't go optimistically, because you don't want surprises. And when you see that you end up in a unpleasant territory, close to zero in the closing balance, or worst case scenario, a minus, then work out what you're gonna do to remove those concerns. Maybe this supplier payment, maybe it can be paid on a Thursday, for example, if you have the money. Another thing is, it's not really relevant to cash flow forecast, but it's relevant to helping you save time, is consider how often you pay your suppliers. Do you need to pay them monthly, weekly, daily? I wouldn't pay daily. They don't expect you to pay them daily, probably. If you pay them weekly and you're consistent, they will be happy. Anything else, more often than that, is just drain on your time. And you're a busy person. You don't need that drain after everything else that screams at you. Just conscious of the time that LinkedIn gives me for a video. I'm gonna have to say goodbye at this point. Thank you for watching. If you have any questions, both Joe and I are available. Please don't hesitate to message. There is no wrong question.